Okay, we are recording. Good morning again, for those that are here live. Okay, we're going to be looking at the British pound this morning. And we're going to briefly take a look at the Canadian dollar also because by way of those individuals that are in the webinar right now, I have 167 presently live right now, so I guess everybody else is still sleeping. The website forum for those that are having issues with this, it's a simple matter of going through the username that you have and the password that you assigned for yourself to log in. Once you're in that point of the forum, you can go anywhere you want in the forum without any further password except for the September month content. When you click on that, it's going to ask you for another password. Not your user password. It's going to ask for a separate, distinct password. And it's capital E, NIGMA number 9. I think everyone's trying to use their own user password to get into that thread once they signed in already. That's not what you're supposed to be doing. There's a distinct, separate password. It's important you realize that it's a procedure because every month will have its own password, and I'll rotate them as we go. All right, so looking at the dollar, we have, we were looking at this order block last night. I did well, yesterday evening rather. I did a quick video explaining that we were probably going to see some movement down here. I like the fact that we had this stop run. So this area down here was defended as far as buying. So we had a bullish order block here, the down candle. Price moves away. It comes back down into that same order block. The mean threshold's respected. It rallies away, comes back one more time, recapitalizes, and it has a really nice surge in price. Then we saw price come down into that same order block in here. Okay, mean threshold, I'm just eyeballing it. Doesn't have to be perfect, but you'll get what I mean by the middle of the candle, the down candle. It doesn't even go down to that level. Okay, but more importantly, it takes this level of short-term liquidity out right below that low, right in here. Okay, so we have a stop run, and immediately runs through a short-term high, comes back, recapitalizes, expands again, closes in the range we talked about, looking for upside for a dollar. Nails it to the pit like we described last night, and then we came down and hit this order block right in here. Let's zoom in a little bit. Okay, I believe you guys can zoom also on your end. If I'm mistaken, please correct me, but I'm almost certain that on your end you can zoom. Is that possible for your end? Okay, yeah. So just so you know, going forward, you can zoom on your own. But I want to keep the presentations as neat as I possibly can, so we're going to continue. Sorry. The down candle here, okay, comes right down into the body of that candle here. But we'd have to combine both of these because you have 1, 2 consecutive down candles. So the order block actually begins right in here. Okay, so if we had an 8-hour candle, okay, because this is a 4-hour chart, this is what you would see as a bullish order block on an 8-hour chart. Now, I don't need to show that because obviously the characteristics and prices, the 2 down candles on a 4-hour, it starts to move up. You would just blend them together. On an 8-hour chart, you would just see 1 down candle, and you use the top of that candle, draw it out in time, and you can see the bodies of the candles are actually respecting that. So don't think that it has to be a specific time frame order block. It has to be 60-minute, or it has to be a daily. It has to be, well, a daily and a 4-hour is excellent. And if you look in those time frames, there's going to be fine. But when we're down in lower time frames, just be aware that if you have 2 distinct down candles or just up candles, they're still representing an order block because it was all down movement where the banks are going to be buying on down movement. So if there's going to be 2 consecutive down candles right before that big explosive move up, you have to blend those 2 together. Does that make sense? Does anybody not understand that? I guess I should have asked it that way. No, Bitbot, you didn't get that? September 7th, there's 4 down candles. 1, 2, 3, 4. Talking about this one here? I'm specifically talking about this right here. These 2 candles. This is all, this would be considered like a, what actually starts in here. This is all an order block as well. Right in here. But to show that, you'd have 1, 2, 3, 4, 5. So you'd have a 20-hour candle, which, I'm not showing 20 hours, but the long and short of it is that's all buying, which is the exact thing you'd expect to see inside of what? What's this price action doing? It's dropping down below the low. Take out the stop, so they're accumulating all those positions. You start with the entire range that you identify the order block with. 2 down candles, right for the big move. Okay, that's the beginning of the range, and then you fine tune it by dropping down into. This is a 4-hour chart, so you have a lot of room to refine it by dropping into an hourly chart, a 15-minute chart, or a 5-minute chart. But the overall buying condition starts like this. Okay, right in here on the top of that candle, down. You can look at this for sensitivity because it's the last candle before the move up. And then we can refine this going down into smaller time frames, which is what we're getting ready to do. But I wanted you to understand that order blocks are not defined just by the very last candle, because if you're in a higher time frame, which is a 4-hour, like we're describing here, there's room for you to refine the actual level that they bought. And you'll see what I mean by once we drop down into an hourly. See the down candle right here? That's the response we're getting right here off the middle of the body of that candle. There's the response we saw. So the overall buying began at 95.06, went down deep, rallied through, and then recapitalized. What specific level? This one right here. Okay, and we'll build more on a lot of stuff still for this month. It'll give you details about rules and such, but I don't want to spend too much time talking about this and miss the whole this morning's commentary. So at 4:30, excuse me, real quick, let me throw this up because if not, I won't have the time. Okay, and you should be seeing the economic calendar. Okay, and I showed you last night in the recording that, and I'm not sure why some of you are actually having issues with it. It's still an MP4 file that I always do. So I'm not sure if it's an issue on your end with the player or what, but I haven't done anything different. The 4:30 in the morning time frame in New York, about 45 minutes from now, we're going to have British Pound High Impact News and CPI, and we have 2 medium reports as well that are due out for 4:30. And then we go into 5 o'clock in the morning, where Draghi's going to drag on with his rhetoric, and who knows what he's going to say. I could care less. What we're going to do is basically study the response between 4:30's number release and 5 a.m. Now, because we have such a small window in time, okay, I want you to understand how much of an impact that has. And we don't have anything else for the U.S. because of the filters. Showing dollar, but there's nothing dollar-based for New York today. So all the actions really should be in London, especially between fiber and cable. But we're only going to be specifically dealing with cable. All right, so okay, let's go back to the charts. So far, we're still in equilibrium. Haven't really moved. It's very nice to see this response in here, but we have a lot of liquidity resting just above these highs in here on a small near-term liquidity pool. Stops are just below here on the sell side. That would take us down into this bullish order block here. Just for completeness sake, we'll take a look at euro real quick. Still in consolidation. Nothing's really changed as we discussed yesterday. Cable. These are the levels I'm watching for this morning. We have the short-term low in here. So obviously you know what the rest is below that. Sell stops. So if it's going to come down, clear these stops, it's most likely going to close in this fair value gap right in here. Okay, and then it'll close in the entire void that's remaining. In other words, we're looking at this. So between this low here and the high of the down candle, in other words, this candle's high is 132.91, and the low on this candle comes in at 133.01. So we have a range between this low and this high, and that is our fair value gap. Okay, and basically it's a small little section of what would normally be referred to as a liquidity void, where price runs real quick away, showing there's some strong buying in here. Okay, there's the response right in here. This down candle is a propulsion candle. What makes it a propulsion candle is because the majority of the strength moving away from that level is seen right there. Okay, now you can say that the whole move begins back here, and that's true. But this is exactly where they actually price in the last time they move away from general consolidation. You need to find that order block on the downside, and it'll tell you where the actual buying was. You can also further confirm it by taking yourself a little bit further to the left, cut through some candles, and you're going to see all this down movement. What was this low here? What was resting below this low? Okay, what's specific in terms of stops? What stops? Buy stops? Exactly, sell stops. Very good. So, do you understand why it's sell stops, Eugene? You awake, man? Get some coffee in you, man. We still got some time. All right, so below the low here, anyone that was buying and seeing that little bit of appreciation on the upside, their sell stop protecting that long would be right below that low. And that's what you see here on this run lower. If you understand this, if you understand what I'm describing here on every time frame, this is like the bread and butter of all things. Watch this level right here, guys. I'm not used to talking during a London session, so I'm losing my virginity here. The low, they run those real quick. They take out the sell stops. There is no chat window, not Dominic. I'm the presenter, so this is really just everyone in the group asking me questions. So I'm treating it like a chat room, but it's really not. It's only one-sided. So if you have questions or if you want me to speak specifically about something, use it, but don't ask like questions that would be otherwise asked on Twitter. Yeah, if you understand this principle of running out liquidity, in other words, the sell stops below recent lows or the buy stops above recent highs, that'll give you 90% of the setups that I trade on. I mean, most of it's always on the heels of a liquidity run. So in other words, there's a pool of stops resting just below this low. So if it's a pool of stops, stops are liquidity. That's what makes a liquidity pool. The price drops down, hits those. Now, it's not just simply going down below that. Okay, you don't always know that's going to happen as a new trader. You can sometimes see it after the fact and say, okay, well, I missed this in their initial surge. But when it runs away after taking their stops, what's the minimum expectation? It has to take out, what's the probability of this setup? What I'm describing here? Well, it's high probability if you understand what I'm explaining in terms of the liquidity run. But let me get through the discussion first because we're getting close to where we got to really be paying attention to the actual live price. So when price drives lower, takes out their stops, it's not necessary that you see this before the fact. That's the importance of this. You'll get better at expecting it happening live, and you can buy it right when it drops below it. That's not important to know initially. You need to expect this to run away from it, and then it has to blow through the near-term, short-term high, which it does right here. That means you have market structure. Okay, so when that happens, okay, as soon as that happens, you have two things happening for you. You have two patterns to use. Number one, you can use the propulsion candle, which is the new down candle. Okay, this down candle in here is going to return back to the order block that was established during the run on liquidity, which is this drop down. So we have two candles. What did we just say earlier about the dollar? When we have two down candles and we're in a time frame that can be refined lower, we're in a 30-minute, we still have room to go down to 15 and 5. The order block begins at the top of this candle, the first of the two. It can go as low as this one down here because if you refine it down to a smaller time frame, you'll see that. But here, the buying begins with these two down candles. This entire drive lower is buying, and it's running for the liquidity here. So if we have two 30-minute candles consecutively, what is that the same of in terms of another time frame? It's a 1-hour order block. Does it make sense? Okay. Now, once it blows through the short-term high that was formed right before the stop run, once it breaks that, your eye needs to go back to that last up candle because that's a bearish order block, okay, that drives price lower to run the stops below the marketplace. They're going to want to have to undo the orders that were driven to drive price lower. Once it cracks through that short-term high, you know that this is going to be what? An ICT breaker. So the market's going to want to capitalize buys and undo the longs here. So there's going to be a mitigation process there. They got to undo the shorts they put on in this down, I'm sorry, this up candle. And you can see, drive it all the way out in here in time, and you see they capitalized all that right in here. So we have two things here. This is what makes this probability very high and why the response you saw was so dynamic away from that level right there. You have the order block here. This last up candle, we're using the body of the candle. Drive that out in time. Price drives through the short-term high right there. Then it comes back right into this last up candle. That's a bearish order block. It's shown willingness to drop lower, but it went through it. So here's two things. If you were looking at this as a sell and you try to sell here and it ran you out and stopped it, no problem, because you have immediate feedback. Okay, I did that wrong. This is a bullish breaker now. I got to wait now. Once it gets back in that level, I'm going to buy it because I saw the stop run here. It broke through. Market structure on the bullish side. I was wrong. I read it wrong. Now I'm going to get myself back in sync. I can buy now on a down candle that's returning back into an hourly bullish order block. Price runs away explosively. This is a propulsion candle. Dries up, clears out the short-term high in here. Presently, we're seeing a Judas, prices dropping lower, and I'm wanting to see if we get a response off of this 132.90 level. It could drop as low as 132. What is that? 132.85, but it can't stay there long. It can tap it and run higher. But I'm more specifically watching the 132.91 to 90 level. Okay, let's see if there's any willingness to snap up there and run higher. I don't like the way that they left these highs here and this here. It could be something like this. It could come down and hit that low or this level here for a run, then hit this order block up here, 133.55, and it go a little bit higher than that and go up to what is that? 33.67. So 33.65 to 33.70 on an upside. That would be potentially what would happen during the London session, with some impact from the 5 a.m. talking, but we won't be live for that. But I'll hang around to about 3:40, 3:45, something like that. I'm sorry, 4:40, 4:45. In other words, 15 minutes after the news releases at 4:30 for cable. And then we'll just monitor it from Twitter then. U.S. CAD. We mentioned this last night. I like how it was dropping lower in here, and we're going to see if it goes through the middle of this down candle, which is a bearish order block. It did that decisively. I don't think that these buy stops are going to stay intact. I think they're going to make a run on that. We really drove higher here. Took this short-term high out. Liquidity rests above this short-term high. If it runs that, it's going to expand and take out the buy stops above these two equal highs. Dollar CAD has been like a really, really nice pair since last week. And we saw that same phenomenon we just outlined on cable. Same here. We watched the stop run, okay, and you watch the down move at the beginning of the stop run that drives price lower. There's a return back to the bullish ICT breaker, and you see the response. So it's amazing when you understand this. It's not necessary that you see the actual turtle soup sell off or buy right before it happens. That's the importance of it, because everyone's stressing this whole in the free section, in the free member area where everybody's still hanging out. In the tutorials, I teach vaguely the turtle soup principle, and I teach the idea of buying it below the low and selling it above the high. You have to do a lot of studying and practicing that, okay? A lot of practicing on your own to trust what it is that you're expecting to see. Now you're seeing the dynamics of everything in concert with one another, and you see why there's no real necessity for me to be 100% on the market every single day, because I can sign on between London or sleep in London if I get a chance to, and just go into New York and then find something that took place as a stop run, and then use the breaker off of that. It's always there. It's absolutely always there. You're going to get one of those patterns or a return to an order block. There's something to do every single day, but you don't have to rush and feel like you have to do it. I have to know the exact time it runs the stops. You're not going to understand that yet as a new trader. So if you're in here and you're struggling with that, just relax. Trust me when I tell you that part will come to you over time. The main thing is can you see it after it forms and understand what's taking place? Because if you understand that much, you'll know exactly what to do with the next price leg. It should go to the breaker. And you'll get a specific teaching tutorial in this month breaking all that stuff down as well. How many times a month does a high probability setup occur in each major? Well, you have 2 high probability setups on average per week, per pair. There's a lot more that you can, I guess, classify as high probability, but to me, I think an hourly setup, to me, if it has all the framework, then yeah, hourly is, it's high probability. But 4-hour, you usually get like one really solid setup per week, and if you live there and just primarily focus on that one, you'll have everything you need to be a consistently profitable trader. It's certainly enough to make a living off of. Not initially you're not going to get rich, but you don't need to be rich right away. You just need to be rich consistently over time. I don't know what you're talking about, Kane, but I want to kind of keep the discussion about today, because it's very easy for me to get in here and talk about other things and miss the whole point of today's discussion. Okay, see if it has any legs to come off this low here. If it doesn't bounce at this order block here, okay, say it runs through this low. If it runs through this low and then rallies back through this high, you know that the up candle right in here will be used for a bullish breaker. So there's a real-time example of how you can study this one. Either test it as a long, as buying on this order block here. If it runs through this low here and stops you out, don't worry, wait. Then see if it wants to run after it takes that low. If it rallies through this short-term high, when it comes back down into that short-term high, the up candle in that short-term high, that's a bullish ICT breaker. Then you'd expect a run up to, first objective would be this order block low here, and then this order block low here. That's the purpose of us getting together on a daily basis, that we can see it. You're using my experience to help you for the immediate near term. Now we want to see if it's going to consolidate in here. If it consolidates, that builds a lot of support for the idea that they're going to expand it through this short-term high, and then ultimately we'll see if it wants to go through that 131.52 level, which would be the old high back here. Now let's assume for a moment. Watch this. Here's a scenario. Okay, let's assume for a moment that dollar CAD runs through the short-term high and up through here. Okay, you can test that as turtle soup, and it stops you out. Don't worry. Log the experience, because you need to trust doing over and over and over again exercises like this. Not live trade this, okay, because it's primarily bullish because of the dollar. But you want to test what it feels like to be in the marketplace when you're selling up here. If it works, okay, if it works and it sells off once it runs above here, say it breaks down and comes all the way back down below this low, it's back up to that low, what would we expect and why? Very good, Dean. Dean says it would be a bearish breaker because it's a break in market structure. Again, so I can outline it so you understand, so you can test it today and see if it happens. The market, if it runs up to this high here and clears out 131.52, say it goes up there and installs and rejects and trades back down and trades down through this low. Once it breaks that, if it trades back up to that low, we would expect it to sell off again, because that would indicate that this whole movement up was just a run on the stops here and here, and it broke down. And then they're going to trade back to that low. That would be a mitigation of the longs that they use to drive price up. They're going to take those off. So it's going to be a real quick sell-off, because they're going to be new sell orders and liquidation of old longs. And then you'd see a breakdown, and you'd watch this range in here, this liquidity void right in here, close in. And you have equal stops, equal lows down here for a liquidity pool as well, with a bullish order block right there. So that's a scenario you want to watch for if we do get up here and run. Exactly. Now you go. Brian says it would be a sell because of a bearish breaker. And then John says it's the start of a new market maker sell model. And that's exactly what you would expect to see if you see all these things break down. So you anticipate this framework in the marketplace. You don't know ever. You don't ever know with any degree of certainty that the things are going to pan out like you want them to. you have to wait for these things to line up with time and price. And is it indicating the things that are characteristic to that setup? A market maker sell profile, a bearish breaker, a run on stops above the market, which would be a bearish turtle soup. All those things have to agree with one another. And you just can't say, okay, well, it's making a lower high here. I'm just going to sell it right here, and it's going to be a market maker sell profile. It can be. It can be. But I don't like these setups when you have stops just north of where it stopped before. To me, it just looks like they're setting us up for, well, they want to get you short here, and they can run you out and take your buy stops out, and they can sell higher when they've already sold early. Because they can do that. They got deep pockets. All right, so let's go back to cable. So far, cable just took us a little bit south of this candle here. The low was 133.01. This candle here is probably 133 even. Yeah, 133 even. So it went down just by 1 pip. Much more interested to see it come down to this level here, 132.90, 91. And then see it run up here. Now, it can do this now if it doesn't take the low out any more than it has here, and say it runs on the numbers at 430. We would watch to see if it hits this level here, as high as the open, or at 133.67, so let's do that. And the reason why, and believe me, not all London sessions are like this, where it can be seen on both sides. When the markets are in consolidation, you have to use both ends of the range. The setups are going to occur out here or down here. You don't know for certain when you're in the middle what it's going to do first. You don't know if it's going to expand up or down or in equilibrium. That's the point of, in other words, price is balanced. So what we're waiting for is the market makers to put an imbalance in price. It means send it to a level and then watch and see if it has a willingness to stay at that level very long. And I don't want that to be green. You see these flaring. Let's go with this. Okay, so the upside can have as low as 33.55, but a high of 33.67. Dollars back to mud. Not really showing you anything here. Now, look at all this consolidation and overlapping of candles in here. See all that? That's a lot of trading going on in a small set range of price. So that really doesn't give you an indication that there's a lot of willingness to do, or not willingness to do, but a very distinct level of bearish or bullish order block. Do you know what I mean by that when I say that? In other words, it spent a lot of time trading in here. So the price is very efficiently traded in this small little block of space and time. So when we trade it up like this, there's nothing in here. Now, looking at it, it would be clean, it would be a void or a distinct level to expect a response from. There's so much efficiently traded price in here. It's not like when you come back down here to this order block where we had a real quick run away and we hit that level and then we ran. Nothing exists in here like that. We closed in this range here. So if we stall here, it's going to want to run the stops below here. Or at the very least run out to the low that he just made here, and this order block would be in play. And the reason why I say all this is because for dollar-based analysis, it's not as distinct or clean for analysis. So you have to rely heavily on your foreign currency pair setup. So in plain terms, the dollar right now where we're at, it's neutral. So it doesn't give us any support at all because it's not in an area where it has a willingness to go up to a very clean liquidity void like it did here, closing it in right here. In other words, all this down candle. We had a very easy way of describing where price would go and went right to the pip that day. Now we're in an area where it's a lot of price action trading through here. All this small section of price right in here, it spent a lot of time, and these are hourly candles. And the only indication we had was price came down, cleared a short-term low, capitalized an old bullish order block, and then it responded. So our last reference point of institutional order flow is what? On the buy side. But we haven't cleared this whole area of price range to even clear out the short-term high. We're still in the middle of it. So it can go back down or stay sideways. It doesn't look initially here that it wants to drive up through the high, even though we had the last bullish indication on institutional order flow. The last response was buying at order block. There's nothing bearish in here. It's very clean or distinct. Exactly, Daniel. There's no symmetry. So when you see this, is the sound good? You guys still hear me? Okay. Yeah, if you hear me drop off in sound, let me know right away because I do not want this to. I don't want to lose audio. Hello, Frenchie. All right. So the reason why I'm making a point about this is because there's going to be times when you hear me say this is not a high probability setup, and one of the reasons that's going to occur is where if we in a range for either the dollar or if we're in a currency like the British pound, or in other words, if it's another pair that's coupled with the dollar, if one of those two don't have very distinct ranges or frames of reference in terms of liquidity pools, liquidity voids, they have to agree on both sides. In other words, the cable has to have the exact opposite trade setup that the dollar has. If you have that scenario, you have the highest probability setups there is. There's no higher scenario in terms of odds in your favor of a trade idea that you're expecting to pan out. But because we have the dollar in this consolidated range in here where it's spent a lot of time back and forth trading at that level or in that range, we're only right back in there with what? The last reference point we had was the buy at the order block. Then we're right back in this muddy little range. So we have to rely heavily on the foreign currencies that we're looking at. And again, real quick, euro dollar, what's it indicating? The same thing we're seeing in the dollar. So what are we seeing right away? That the market is on hold. Is it understandable that it would be like this for the euro? Given today's economic calendar, what's happening at 5 o'clock in the morning? Exactly, because we have Draghi putting a drag on the markets, okay? And now here we go, we have the markets in consolidation ahead of a high-impact jawboner. Okay, so Draghi's talking at about less than an hour. Okay, so everybody's just waiting to see what he's going to say. And you're seeing that same thing shown here where we don't know. Prices in a point of balance. There's no imbalance right now. So two things have to exist for high probability, and this is a note-taking session moment, okay? High probability setups occur when the market symmetry shows dollar-based rally or decline ahead near term. In other words, we expect bullishness or bearishness that are very distinct in the dollar, and we see the opposite true in the foreign currencies. And we look for that in the majors. If 2 or 3 have very clear, distinct opposite sell scenarios for a bullish dollar, you have a high probability setup as well. So there's going to be some times where the dollar will show, it could go lower, but then cable looks like it really wants to go lower. Well, that doesn't agree. And say the fiber does the same thing. Looks like it wants to go lower when the dollar looks like it wants to go lower. It can happen. It gets in an area where you don't know what's going to happen. So you have a price balance. We cannot have high probability setups in moments of price balance. It cannot occur when everything's at equilibrium. If everything's around equilibrium, the market makers are still allowing the orders to build above and below the marketplace. They're still letting those pending orders build up. That means there's not going to be any protractionary movement yet, and we have to wait for that. That means we have to wait for the movement of the range to expand up or down, and we don't care what direction it is. We're just waiting for that initial movement, because without the impulse leg, we can't discern whether if they're running stops or if they're running to a liquidity pool. I'm sorry, filling in a range, liquidity void rather. Exactly, Ray. Ray says we wait for the elephant to put its foot in the water. You have to have displacement. Without displacement, you have no indication that there's institutional sponsorship behind the move, period. It's either going to come in the form of capitalizing old orders, in other words, buying at old bullish order blocks or bearish order blocks, or through manipulation. That means running into an area of stops. Right now, we have nothing. You're just sitting and you're waiting. And this is hard, especially for those now in this group, because you're paying me money. You're sitting in front of the TV. It's like pay-per-view. You paid for it. Now show me something. It may not form a setup, but I want you to see the contrast between when the markets are like this. Well, think about it. Look what we did last week. Last week, we had very clean, defined liquidity void, which gave us what? Very high probability that it was going to go up to that level. What level? The low of 95.57. The high came in at 95.57. That's when our analysis, that's when ICT stuff is perfect. It goes right to where we want it to go, and it has the directional premise and bias in favor. We don't have that now. It's very important you understand that, because it's not something that you want to, just because we have tools and all these fancy names for describing what institutions are doing, it doesn't mean that you go in there and you force a trade. You don't want to do that. And believe me, I'm aware that you want to have a trade set up just because we're in London. I would love nothing more for that, but I'm giving you what I do on a daily basis, and it's going to protect you. It's going to keep you out of bad trading opportunities, and it's going to help you highlight when the probabilities are high, favor high probability in the likelihood of it being profitable. And I think everyone here would agree that it's more important to know when not to trade and avoid losing money unnecessarily than it is to take a trade every single day. If you learn the skill of knowing when to get out or stay out when it's low probability, you'll be able to weather the moves that take place when you had it classified as a low probability condition. And if it still moves, you're like, okay, it doesn't matter. It didn't line up with high probability for me. And you know that there's always going to be a setup every single week, every single day in something. There's always some kind of trade, and you won't feel rushed. You won't feel pushed into having to do it. So, in clarity, real quick, before we get in here and focus on the pound number release in about 20, what is that, 12 minutes? Yeah, about 12 minutes from now, it'll release. High probability has to have symmetry between the dollar and the foreign currency markets. And the reason why I trade in the majors is because obviously to get trader tax status in the States, we have to trade with dollar-based currencies to get that tax break. Secondly, because the dollar is the king, it's either going to allow all the currencies to move around freely or it's going to hold them in place. We're seeing that today. They're holding dollar, which holds all the other foreign currencies. If we see high-impact news coming out when we're in a consolidated pattern like this, the probabilities are very, very low with directional biased trades. We don't know with any degree of certainty if it's a bullish or bearish scenario. We don't. And that's okay. It just means, okay, well, right now we're in a holding pattern. We have to wait for the market to indicate what it's going to do. Once it does that, once we see the reaction of price after that number release, and it still may be rather muted because of the 5 o'clock Draghi. And I want you to understand the distinctions of how high probability conditions like it was last week when everything we were talking about just happened like magic. And now we're in a less favorable condition. Things can still line up with all the things I teach, but they aren't in the charts yet. There's nothing here yet. The only reference point we had here was a bullish order block that was capitalized. So we have a slightly, and I mean this very very carefully. I don't want to say it where it's like, okay, go in there and I'm giving you something cryptic. I'm telling you, I don't know this morning if we're going to continue up for the dollar. I don't know that. But using what I understand, the last point of reference was a bullish order block here. And I would expect if it's going to be a directional movement after the release, I believe personally that they're probably going to want to take these stops here. And then if we lose this low here, they're going to run the low here. That's the scenario I would expect. I think the initial pop is going to be a drive higher on dollar, which is the reason why I'm looking for the low or expectation of a buy down here on cable. But it may not give me that level first. It may come up here and hit that one. And if it does, it could expand up to 33.67 and then come down for this low here. And then we'd have to wait and see what Draghi says, which I don't ever listen to him. I just expect something to happen, you know, on the heels of him running his face. If he's so smart, why doesn't he trade? If it ain't him, it's yelling. All right, so I like the fact that we have consolidation here. Okay, we have consolidation, we have expansion, consolidation, expansion, consolidation. So now the next leg in the algo is going to be what? Expansion. Yeah, I would have really liked it if it would have hit that level down here at 32.90. I would have bought it right at that moment ahead of the numbers. I would have did it right then. If it stays where we're at right now, stays tight, it could still drop down in there. If it does, I'll give a demo long for a run to 33.55 to 33.70 or 65, 33.65. Why didn't what? Hold on 1 second here. What void, Tanner? To the left over here? Well, a couple videos like last week when I was talking about how I didn't want to sell cable and why was I not concerned about this or why was I not taking this into consideration? Is that what you're asking? The reasons why is I think that cable on a higher time frame daily, I think they're going to want to close in that fair value gap. Let's take a look at that real quick so you can see what I'm talking about for completeness sake. We have this exposed range in here between the close of the candle and this high. So we have this little area right here. And I think personally, I think it's going to want to close that in. Well, in terms of high probability, I think that's most likely what we're going to reach for, given where we're at right now. All of this in here, this ranging, I'm not so sure we're going to do that right away. I mean, I could be made a liar. I don't know. Like I said, I'm learning all through post Brexit, you know, what's going on. So today, I feel like a neophyte with cable because I have all these things in the background and I'm forcing myself to be exposed to it real time with you. Well, I don't work a job that gets me tired. The only reason why I'm a little tired tonight without having any sleep is because I had to talk to my family member about the things that were going on. But apart from that, I'm fine. I'll sleep between 5 o'clock and 7. That'll be enough for a little while. Then I'll go back to sleep after I talk to you guys after New York. Why would I ignore the daily order block? Which order block? Is it a bullish or bearish order block you're referring to, Cliff? Well, there's no news coming out in New York that's going to be high impact. So what we're establishing hopefully is this morning, and we got to go back to cable on a lower time frame. I'm not sure if you're referring to. I'm assuming, Cliff, you were talking about why am I not worried about this bearish order block? Um, we still could be, and that's what I'm saying. It would just this move up into this smaller range we just identified on the smaller time frame, because we're on a daily chart. That would take us up into the mean threshold of that bearish order block. That's what I'm saying. It's that's where I would look for it to expand to, because it takes us up in the middle of that into the middle of that up candle. See what that is? That's basically the what? Middle of that candle, right? So we can expand up, hit that middle of that bearish order block, and then roll over. I don't want to sell it. I just don't want to sell cable. I don't trust it. I don't believe that it's a trade to take right now. And while it's had a nice couple, drops, but it's coming back aggressively more on the buy side. And like I said, I don't want to stand in front of this one on a sell. I don't want to. And I'm okay with being wrong. There's a lot of learning for me with my tools in this environment for this particular pair, which is great. I feel like a new trader again. I'm getting to relive all that all over again. But I just don't trust the undertones with this currency, because it has the conditions of a micro black swan, where it'll just go crazy higher because it wants to erase all of the Brexit sell-off. I don't believe it's going to do it right away, but it could, and that's why I'm being leery of being short. Okay, so let's go back down into a smaller time frame. Now I'm going to take the comments off because I want to focus on the live session price action. So we're going to end. Don't give me any more questions or anything. I'm going to save the log, and I have 3 days worth of logs to go through and answer in a recap. So I'll do that today. I'll kind of close the gap on all the things that weren't talked about during the video. So let's put this back over here where I don't see it. So you can see that same thing here we were describing on the daily chart above us on cable. We're seeing the reverse of that on the downside. We have a very small little fair value gap. In other words, where there was no other trading in this range here except for this down movement here. So this could actually be refined on a 15-minute time frame to here. Okay, and you can see they dipped right below that low, right in here, but left the range still. They left the range. So we can do this if we don't get much movement lower. And watch and see if there's a response off of 33.15. With a run to 33.55. So 40 pips. For 2 minutes and the numbers release. That's about how much chart you want to have on your London setups. You want to have at least about that much data behind you that we can see all the liquidity pools, all the ranges that would be there. Really, there isn't any ranges except for the one we've exposed here. Let me get this off because it's no longer salient. So based on cable, if I was just forced to not use any other instruments to give me intermarket or intermarket analysis, I believe that we're going to expand up to 3350 to 3365. I don't know if we'll have any legs to get past that initially here, but I think that's what we're probably going to see a reaction to on the number. And the reason why I believe that is we came down, we just took out this low. It may be just enough because of the conditions we have in the dollar being held in consolidation. Here's midnight in New York. The movement has all been straight down. It's about 40 pips down. It's about the classic extreme end of the range you would want to see. Now watch the response. Now again, I don't know what the numbers are. I could care less. Watch this one here. This is the one we're looking for. Check dollar real quick. Still nothing on dollar. Cable soft. I'm sorry, yours not doing anything. Cable. Watch this level right there. 3290 to 3295. We've already seen the market come down here and clear these stops out. The market came back and took out two levels of near-term resistance. In other words, we cleared out stops above this high here and this smaller short-term area here, this shift market structure bullish. Everything here is slanted for a run up into this area up in here. And again, they didn't get below that low again. And that's another thing that you're learning by seeing this. With the dollar being sideways, you don't get a lot of that quick or definitive price action where you can see where the price should go right to that level and expect a response. It's even having a hard time on a high impact release just to take out a low here. And that's what I'm trying to, that's the framework that you end up trading in when the conditions are not high probability because of the dollar being in an area where it doesn't have a liquidity void. It didn't run a recent stop low or a stop high. It doesn't give you those clear parameters to work within. So when you see these conditions, well, you can go back to bed. But I'm not doing that. I want you to see the results of what I'm describing here and if it can go up and still hit that area. Because I have to give you a move every day. Otherwise my ego won't rest. And another reason why you want to have your chart set up like this, and we'll have more things in terms of tools, not indicators, but tools, and it's all been based on time and price. We'll slowly incorporate the agent range and all that business, but it's not necessary today because conditions are not favorable for all those factors for the given conditions. But you want to have your beginning marker at midnight, and again, you should all be using the Forex Ltd demo account. That way we're all looking at the same thing. And you have to have your 1900 delineations for end of true day. So the daily range is going to be formed between these two vertical lines. We've already seen the market drop down. So the expectation is the daily range would have some movement up. There's nothing on the upside from the opening at New York here at midnight. It has a small little minor little up move here. Nothing considerable. Didn't even run a stop level over here. These short-term highs still intact. It didn't run that. And we just barely went one pip below this low here. So look how mute this is. And any other day when the dollar had an exposed range or if it had ran out recent stop, cable would have been all over the place on a high impact news. I mean, this is the king of volatility in London. I mean, this pair is the animal. So because we have very lackluster response on a high impact news event, this is what you end up getting when you trade in these conditions. And sometimes You'll miss setups, like we were looking for a low down here. That's when you'll see, well, I was expecting this order block to happen, but it didn't come down there. So there you go. The reasons why is because we still have a dollar-based consolidation. Nothing's happening in dollar. We're still sitting in the mud with no clear indication where it wants to go. And again, it may be on the heels of, well, not heels, but it's probably just because it's a precursor to the effects that Draghi's going to have when he starts talking in about 25 minutes. The main thing is I want you to understand that we were looking for a response down in here, with ultimately an expansion to occur to take us up into this area here. It would have been much, much more fun to see at least hit that, because we have all the context behind us over here with they took the lows out here, very sharp response, and it came down just to recapitalize an order block and then send it higher. And for context and for learning, had it done that, I would have went long live. And if it stabs one more time then it does it, I'll still do it. It's still early enough to do it. If it hit that level, I would have went long. I would have took first profit off at 33.50, 5 pips below the low of this bearish order block. So I want to get out before the actual order I expect to see come into play. In other words, the resistance level, I want to get out before that, at least first profit, and then let me see if it has any legs to go higher. Because ultimately we could be seeing the later in the day, the New York session after Draghi speaks, he may say something that allows the market to escape its consolidation and then expand higher. And this could be the low of the day down here. And then we expect to see time and price unfold and see a higher close. But because we're in a holding pattern for dollar and still even with cable, the upside is, at least for right now, it's limited. So when we combine these understandings that we're talking about today, and then refer back to when there are elements in London setups that have a void that would be very distinct, very clean ranges to trade in, or distinct liquidity pools. When that is occurring in dollar and the currency of your focus for the London or New York session, the trading will be very symmetrical. The price action will be very symmetrical. You'll get very distinct responses that are very easy to anticipate. And when you don't have that, you certainly don't want to be trading as a new trader, because you're not going to get the clarity that you would have in an otherwise symmetrical market where the conditions of the dollar and the pair you're focusing on trading, they have to have opposite setups that are very clear and distinct. If they don't, you need to stay on the sidelines and just practice in a demo account. Don't take live trades in that environment, because the probabilities are so in your favor in those conditions like we're describing today. So this is, I mean, some of you probably are thinking, well, this is bogus. I wanted to see a London bombshell. And that's great, so do I. But you're actually going to learn more from this, because last week I already showed you precision live before the fact. That's not necessary to happen every single time. You're going to learn more about keeping your money in your account by understanding these environments, because you won't force a trade. You won't get so frustrated and say, oh, screw it, I'm getting in there. I just got to do something. This is a waste of my time. Even if I take a loss, at least I did something. You don't want a loss, but you want to take action. Don't do that. You have to put money at risk for a real reason, and it has to have a payout that has a high probability. Otherwise, why are you risking your money? Just take it to the casino. Now, if this candle flips up and takes out the short-term high, it should expand up through the stops here at minimum, take out the near-term European high. So far, a nice little response off of Aussie. Not much, but that's something to study. It's good. Dollar CAD still holding consolidation. That's good. This might set up a run for that stop run here in New York if we get some kind of a release in the dollar post Draghi. All right, look for expansion. I'm going to watch the response right above the short-term high. Right now, liquidity is resting just above this short-term high. Right above there. And we want to see how much strength it has. Once it gets through this high, does it want to expand or does it immediately want to drop back? If it drops back immediately, the stops above here are safe and they're going to want to run a little bit lower into this green area here. Personally, I think they're going to run these stops here and that's going to inject liquidity, sending us up into 133.50 to 133.55. And again, just because it's moving what we're saying, it does not mean it's high probability. It just means that this is the most likely outcome. High probability would have been coming down into this low right here, 132.91. If it would hit that, that's high probability. Just because it's going where we're calling it, it does not mean high probability. You'll see that the tools will give you the ability to read price, but don't take that as an invitation to get in the market every day in every session. Believe me, I already know some of you are thinking, man, I'm going to take this information. I'm trading London and New York and Asia every single day, and I'm going to quit my job next month. Don't lose sight that this is still something that you have to gradually grow into. Don't rush it, because you'll actually hurt yourself doing that. Consistency comes with the experience of knowing what it's like to be in unfavorable conditions. Even when the trade ideas pan out in your favor of your foresight, if it doesn't have the context of high probability, don't put live funds behind it. Don't do it. Believe me, you'll thank me for this one, because you'll remember it when you don't listen to it, and you say, man, I had all those things there and I still pushed it. Then you have to learn from that, because I won't be there to know you did that unless you tell me in an email. You can avoid all that stuff by just understanding what I'm sharing here today. Because of the holding pattern that the dollar's in, it makes difficult price action reading for any session, not just London. It could be the same thing for New York. I said, look at this. We've already been 12 minutes past the high impact news release. High impact. Okay, and there was two other medium impact news events for cable. Still in the middle of the range that's already established for today. The range for today is 33.41 and 33.31. So not much of a range. I'm sorry, 133 even. What am I saying? The lowest 33 big figure and 33.41. So 41 pips is the daily range so far, and that's nothing for cable, especially after a high impact release. And in London, they're waiting for Draghi. But liquidity still rests just above this high. And if it does that, it'll probably want to reach for the stops above here as well. We've already tried to get below this low here. It doesn't mean it can't do it later, but we've already reached for the liquidity here, and there's been no real willingness to expand much lower than that. So the liquidity that rests in the marketplace, contrary to this side of the market, in other words, above us, is above the near-term, short-term high or the intraday high that's formed today, and then yesterday's high. What are you doing, girl? Okay, so dollar looks like it wants to sell off a little bit in here. Liquidity resting just below 95.06. If it runs that, that'll give us enough room to run the high on cable for today, 33.41. Now think about how much prices moved and how much babysitting we've done. Now, I haven't been paying attention to the questions, but I'm going to ask now. Does this seem like an efficient way of using your time in the market for live trading? No, it's not. It's like watching paint dry. Okay? So, as we go months into this mentorship, there's going to be times when I will indicate that London will have low probability. When I say that, this is what it means. It's going to be like a snail's crawl. It's going to be very lackluster price action. You can trade a demo account. You can practice in this environment to get yourself used to why you don't want to be trading in it. So that way when you have the characteristics ahead of it, you know, I just don't want to be trading that. There's not enough imbalance in price right now. There has to be a very distinct imbalance where price is now and where it just recently came from. We're still in the middle of a consolidation. It's an iffy condition. It can go either way, and you don't want to trade in a condition where it can go either way. You want it slanted where you can clearly see where they're going to want to run liquidity, above us or below us, and we don't have that here. On a micro scale, I'm telling you that it's right above these highs, but it could come down here deeper first and then do that. It's too much of a crapshoot. Adam says it's more efficient than we used to do. Well, you're learning, and that's good. But as far as trading, which is what everyone wants to do, you all want to get in there and just put money down and get paid for your time. But it's not always like that. But you are getting something that's worth more than money. You're getting the experience, because without experience, you're going to have difficulty making money. If I could go back in time, if I would have had someone sit down with me like this and explain why the conditions are less favorable and why they're less favorable than other times, I could have avoided a lot of pain and a lot of lost money. And I think if books or courses or teachers would spend more time on this, it's easy to find ways to buy or sell. That's the easy part. The hard part is knowing why you should be doing it and when not to do it altogether. This lesson that I'm showing you today, and this ain't going to be the only time you'll see it. There'll be plenty more opportunities for this to occur. But this lesson was the longest one for me to learn, and it was the most expensive one for me to learn too. And Paul says he just wants to trade breakers. Is it a valid strategy? Yes. Trade breaker to breaker, or order block to order block, or you basically have to know those four institutional reference points: fair value, liquidity pool, void, and the equilibrium. If you understand there's four, you'll know how to trade every market environment. Any given time, you'll sit down in front of the chart and know within 5 minutes if there's an opportunity or if there's not. It's simple. It's very easy. It's not easy getting to that understanding, but when you understand those four reference points on institutional order flow, as I teach it, you won't spend very much time discerning whether or not you want to be a buyer or seller or stay on the sidelines. And that's efficient market analysis. You're not spending a whole lot of time looking at stuff, trying to come up. I mean, think about it. You know I don't like indicators, but I guarantee you, if we did a poll and it was all private, you probably already went through 11 different indicators watching this live session to see if there's anything calling buy or sell. Because you're forcing something. You need to know something. And there's really nothing to know right now except for to sit on your hands. I appreciate your honesty. A couple people were like, man, how'd you know? Because I did all this stuff too, man. I appreciate that, Adam. It's more fun when we have environments like we had last week where we called the low on Canadian dollar. When we have symmetry in the marketplace, it'll be a lot more. You'll have no problem staying awake in London then. All right, I'll give it 5 more minutes and then I'm going to close it because I do have to get something to eat. I'm the type of guy, if I don't eat when I'm hungry, I lose my appetite and I feel sick the rest of the day. So, so here we are, hanging around, doing nothing. I think we'll probably punch down there now. It might be waiting for 5 o'clock just to do that, wipe out on that low here. This is not distinct. It's just like a double tap down there, equal lows on an area. In other words, this is look like support, and they gave a nice little runaway. So everybody that's intraday long, their stop's going to be inside this low green area. So they could take price down into this candle here. The open is 32.89. Yeah, so 32.89 to 32.90. If we get a spike down through, you could hit that if Joggy says the wrong thing or the right thing. Depends on how you want to look at it. I can answer that at another time, Tanner. In fact, I have a session when we start the higher degree stuff later in later months. I'll tell you the whole storyline. Uh, Tanner asked me what led up to the two guys that approached me about learning the things I know. What made them approach me? Yes, Robert. Robert's asking. The news events are just they're like smoke screens. That's why I call them volatility injections. They provide perfect cover for the manipulation because it's like this. Before the algos went to completely electronic, there's still opportunity for them to manipulate manually, It's not as obvious and commonplace as it was, say, 15 to 20 years ago. But now, um, if obviously if you're a new student to price action, it makes sense because you don't have anything to compare it to. But if you've been around for a while, you've been in the retail regurgitated stuff, it sounds like tinfoil hat stuff until you really sit down and study it. Then all of a sudden it becomes crystal clear that it's all 100% rigged and it's manipulated 99% of the time. So you have 1% efficient market trading time, okay, and the rest of it's all smoke and mirrors. Anyone that puts their nose to the charts with that expectation of looking for evidence of that, they'll find it. They'll see it. It's there. But if we were led to believe and indoctrinated that it's a free market and stop losses just happen because traders had it wrong. Traders don't get it wrong. Okay, markets are manipulated, so it makes perfect sense to do their manipulation around high impact news events. That's why they created these things. Why would they want to give you these data points? Well, think about it. Why would they do that? Just like bank reports. Why do banks post bank reports? Like they're going to help you out? Here, take some of our money. We want you to do it. It doesn't make any sense, but we'll believe it. It makes perfect sense as a neophyte. Hey, they're looking out for me. You're looking out for you so they can run you over. So yes, the news events are actually perfect cover for the manipulation that takes place on a daily basis. You can only go back as far as your data provider can go. And when you go in these 15-minute time frames like you're asking, Kane, it's limited in scope of how far you can go back. There's still some human involvement, Robert, when the algos are doing certain things, um, but it's primarily all just electronic. Daily, I'm being asked how often do I check daily range. I look at the daily range over the last 5 days, but because of the conditions we have right now, it's going to be rather insignificant because it's if we do get a big movement, it's going to be nothing for it to go above average daily range. Um, for those just waking up and joining us, they forgot to set their alarm clock. Um, we've been outlining the potential run to 33, I'm sorry, 133.50 on cable to as high as 133.67. We were initially looking for that low and green area for a bullish order block retest and to close in the fair value gap, which is what we've outlined here. Small little liquidity void. We've came down below the low here 2 times, and it's since not shown any willingness to go higher or lower. As we approach 2 more minutes, when Draghi starts to jawbone, we'll probably get some kind of a knee-jerk reaction, then clear up these lows, and then I want to see a hit on that level right there. If I can get the show up. There we are. 32.91. So I was looking for that initially as we were coming down. I wanted to get long on that and get a run up to 33.50 just for a London setup. I didn't have any kind of convictions for extreme higher prices than that because given the conditions in the dollar, which is over here, we're still in sideways consolidation. Nothing's really moved. And it's all based on the waiting to see what Draghi says. And what here and I was outlining why this is not a high probability environment because of that. And because we don't have any exposed ranges, no voids, no distinct liquidity pools that we recently ran, today we only had just a rollover. Nothing happened post midnight in New York. Now, because Draghi is talking in another minute, even though we're looking for this level here, the reason why it's not high probability conditions is because he could say something, to justify the markets to do a long. Okay, and this would be a justification for being long here. But what he says, the algo will expand and run out the lows down here. And then you'd walk away feeling like, well, that didn't make any sense. And the reason why is because there's no real distinct uh, symmetry between the dollar, presently where we're at. We're in the middle of equilibrium. There's no imbalances right now. Everything is completely in the middle of the range. And cables the same way. The low and the high end, and more specifically, the most two significant reactions, we had a stop run here, and we had a stop run down here. So the overall range is between this low here and the high here. We're right in the middle of the range. We're in equilibrium. So it's a pot shot, and you don't know where it's going to go. It's easy to trade like we had last week, where the ranges were very distinct. We had voids to trade into, and it could be seen on both the dollar and the foreign currency pairs. And I don't want to be short cable. Okay, so watch this level. I'm going to drive down into it here. Why would I expect it to bounce here, and why at this order block? We have a consolidation in here, and the consolidation had expansion. That's the expansion. Then from the expansion, we had reversal. That's what this is. Okay, price went back to consolidation and expansion. Consolidation, expansion. Now we're in a larger consolidation, and watch that level. We've already had a stop run down here. With the market in consolidation like that, there we go. Right here in the order block is down here. Let's see what dollar's doing. Not much. Okay, so we moved into the order block here. Euro dollar's dead. $95.25. The question is it significant that it went through middle of this order block? Not when it's a speech. If someone's talking, if it's a number, then it's very significant. But when it's a speech, it's not so much, because there's always going to be an exaggeration to whatever they say or whatever they might say, which is the reason why speeches are a little bit trickier than just a hard data number. Yes, I'll trade speech days, especially if we have the conditions like we had last week. Because if there's exposed voids and very distinct pockets of liquidity where I believe the market will reach for, it doesn't matter what they're going to say. They're going to say whatever they're going to say, and the market's going to do what it's going to do to go to the liquidity. My trust is more in the fact that the market's going to move to where the orders are and where the money is, and whatever they're saying is going to have nothing to do with what you see in the chart. It's just they only talk about it when it makes sense and fits their agenda. When it doesn't, they'll just say, "Well, the market discounted the news." No, that's not how it works. Okay, so we expanded down into the bearish candle right in here. Swept it. Nice little rejection so far. So these equal lows in here and this low here was wiped out. Just really not wanting to do anything yet. Euro dollar is like sleeping. Hmm. What I'm thinking out loud now is we have nothing ahead for New York in terms of news. Okay, and let's play devil's advocate for a moment and say this is one of those days where we don't get much of a run up for a juice swing, and say we're marking a down day. US CAD indicates it could potentially sweep higher. That means it's going to be more evidence for a bullish dollar. We're seeing willingness initially to want to go up. Nothing significantly strong here. Euro dollar's nothing. It's sitting right dead middle. Pound dollar, we have a little bit more range down here for this bullish order block here. If we would have had a little bit more of an exposed range in here and we would have rallied, that would be a good scenario for a practice on a short to get down to this order block here. But there's nothing in here that would want to make me feel like doing that either. So I'm still torn between the two. Um, Euro is being held sideways, and we have a little bit of movement on the downside for cable intraday. Euro pound should see some movement up. And sure, up moving the euro dollar, euro pound rather. Yes, John asks this: should we expect Z days like this before high impact events, especially if you don't see any ranges or any like liquidity voids where the market's got ranges to close in up above or below the marketplace, then yeah, you'll see these sideways consolidated market profiles. Why am I not using the breaker from yesterday that swept the lows? Because it's already been used here. I mentioned that earlier in this recording. If you just got here, you'll hear it earlier. I see a lot of I see a lot of your comments, and you're admitting you're having struggles. Why I pick certain order blocks over that. That's the part of the mentorship that you are paying for. I give examples of why I'm selecting them and going overboard in terms of describing why I'm selecting one over another. And there's going to be a framework that's given to you in notes. That way you understand what I go to, what's my procedure. So you're not going to get it in the first time. You're not going to get it in the first month. You're going to have to spend time doing it with me. Then it makes sense. Yes, it takes a lot of work to learn it. And that's why I say it's expensive. Not because it's 150 bucks, because that's not a lot of money, but expensive in your time because you need to spend time in front of the charts doing it. And the things I'm saying to you as we were describing how the lows were left intact, that we would expand lower and potentially down into that order block over here. The idea is when I'm not doing it with you, you need to be thinking out loud like I'm doing, asking yourself, are we looking for stops below the marketplace? Are we looking for stops above the marketplace? So far, we've only probed the lower end. We took out this low here, swept it, and we did it right at the announcement of a high impact news event for Eurodollar, which is Draghi, and we swept it with no immediate follow through. And we have this really nice price structure over here that had already a stop run below it and then a rejection. I would not study foreign currencies without having the input of the dollar, because the dollar will give you the basis of whether or not you're going to have high probability or big range expansions. And then you're basically relying, like we're doing today, on just the technicals alone on cable. And while we're talking about it and calling the little micro levels it's reaching for, it's not moving enough to warrant dollar risk. And that's a good question. Do Since we're in the middle of well, we're in a consolidation near a nice little potential reversal area. Okay, imagine this being the early stages of a market maker buy profile. We have consolidation here. We drop down, return to the consolidation, sell off. Redistribution, smart money reversal, low risk buy, expansion, and we're probably entering another area of re-accumulation or buying. And we would see the market want to reach up in this area here and potentially clear out this level here. You don't see it so much when you're zoomed in, but That's what I'm looking at the justification for. This is already priced in a reversal, and we're coming back to that a little deeper than I'd like to see, and it doesn't have much of an exposed range either. But we do have the minor framework of the structure being broken over here and retracement. So we have a lot of support in this area here, and that order block is basically the mean threshold or middle equilibrium of the high to low, essentially. So probability falls off, in my opinion, if it goes down to that level. I don't see that as a buy. I see that as a downside target. So if bears are in force right now, they're going to want to try to get down to that 3270. Bulls are looking for this area here to be long in, and that's why we're focusing primarily on that. They look for the upside, 3350 to 3367 for the daily range, because liquidity is resting above the initial high here, with no runs on buy stops at all today. If I had taken the long, hang on 1 second. If I had taken the pound long trade, would you collapse it now because it should have moved away quickly after the stop run? And well, I wouldn't have taken the trade at all today because of the conditions we've outlined. That's what I'm hoping you take away from today. I'm giving you the reasons why this is not high probability, and we've seen indications of it all morning since we started talking about it. But let's just say, for instance, say that we didn't have the framework we went into with, that it was not a high probability condition today because of the consolidation we've seen in the dollar. There's no imbalance in price at all. Okay, we're just now seeing the early stages of imbalance now on a micro scale intraday. The market's moving away in a distinct direction. That's what we need as traders going into London and New York. We don't want to do trading when it's in consolidation. So let's just say, for instance, the market was in a more favorable or high probability condition. In other words, the dollar wasn't in the middle of its range, cable's not in the middle of its range, and we have very clear, distinct ranges above or below us that we can trade for. If I went long here, I would not be happy about where it's at, and I would either take half the position off or move to the sidelines completely. But the takeaway from today is I want you to see that while, yes, the market traded down into a range that we were looking for, and I can't remember what we looked for in terms of the low end. Uh, 3280. Yeah, 3280, 3285. We spiked down into it with a low of 3281. It looks good. I like this setup more for the expansion on the dollar CAD. I think that's going to be the play for New York. We've consolidated. I'm sorry, we've consolidated like I was expecting us to do, or bull flagging if you want to look at classic chart patterns. We're bull flagging just below a short-term high with stops resting there, and those buy stops we noted last week still in play. So this could be a wind up for them to expand into New York, which would indicate further bullishness on dollar, which is what we're seeing here, early evidence of, and pound may come down all the way into this bullish order block right here. So again, that's the reason why we're on the sidelines and saying there's not real high probability there. Before all this happened, there was framework to justify both sides of the marketplace, which is the reason why there was no action taken. I'd rather it stay in its consolidation. I don't want it to run before New York. If it does, then it's not going to run for that second one, I don't think. I think it's waiting for the North American Open, and it'll drive it up there. All right, we have 2 points of liquidity below us. We have stops below the short-term low and the bullish order block in here. If it hits this, this is the last line of defense for buyers. If there's no response at 32.69 to 32.75 to 32.70, we don't get any buy from there. We're making lower lows post what was seen on September 9th. No, Simon, I would not take a trade right now. As early as 7 o'clock in the morning, New York time. That's the next time of when I'd be allowed, based on my rules, to do it. Now, there will be some times you probably in the next couple of months you'll probably see me take a trade 10 minutes to 7, something like that. If it hits a distinct area of liquidity that I'm aiming for, and it just happens to be a couple minutes before 7 o'clock, that may occur, but generally I'm waiting until 7 o'clock New York time as the next filter for time. "32 hours, no sleep" is starting to hit me now. I'm feeling it now. Euro dollar still sitting. I would lie if I said I only take trades in kill zones, because sometimes I have limit orders in, which I haven't been doing too much of in recent months. Sometimes the limit orders will get hit outside the kill zone, and I don't have any control over that, especially if I have it set and I'm letting the market take me in. Then sometimes it will be just outside of a kill zone, and that's okay sometimes. The kill zone is just a high probability. It doesn't mean there's never going to be a setup that occurs outside of those time windows. It just means that the highest probability for the setup to form, you'll learn over time that it's between those time windows. And it's a good idea to stay in those parameters. Don't take that as an invitation to trade outside the kill zone, because sometimes I've done it too. Because when you do, you're trading it with less probability. Do economic events affect the time range that I trade in? Yes, that's the basis of what we do in London and in New York. We're looking for injections of volatility so we can anticipate manipulation. And if we anticipate manipulation, we'll know exactly what they're going to be doing, reaching for liquidity in the form of a stop or reaching for fair value. There's only two things that can occur with a liquidity injection. It's either going to induce new buying and selling, or it's going to recapitalize an old position that they've already established. And it's going to come by way of either running stops or go into an order block. Peter, he's asking, is equilibrium also a form of fair value? It is, but it has its own distinct characteristics, and you'll learn that this month as well. See, equilibrium is a distinct price level. It's not like a range or a zone or anything like that. It's a distinct price level. Fair value is treated like a void. So you have grades of how far it can go into that. You're going to learn that in this month's teachings: fair value, equilibrium to discount, equilibrium to premium. If you kept notes, I actually gave a rundown on the actual lessons for this month. They were already included in the videos shown this month. I think it's the setup, the setups or something. It's the video I did with telling you how to get the MT4 demo account that we're using. This is the only month you're getting 9 teaching videos, and the only thing that makes it 9 was the initial one to get everybody looking at the same data. Otherwise, the million emails I get a day, well, my candle looks like this. Of course, it's a different data provider. So to avoid all that, we look at the same point of reference, and then you're going to blend what you see in this in your own live platform. I can see it end. Bearish euro dollar toward the low 112. What are your thoughts? I don't have an opinion on euro dollar. It's neutral. I would love to have seen it drop down here and close in this void. That's what I would love to see it happen to. But it's not wanting to move right now. Well, you're getting 2 days worth. I didn't really give you a session yesterday because I had to take. So you're getting a double one today. You all have the ability to trade better than I do, and that's actually my goal. You have all the advantages that I didn't have, and if you learn from the things that hurt me, and I know that are weaknesses on my part, if you listen to me and trust me, you could easily avoid all the things that I messed up on, and that's what you'll hopefully get from this mentorship. Not just learn how to trade better, but you'll avoid all those things that I lost. Man, so much money, so much money. I don't know how to answer how much of the group is going to be profitable, because it should be a direct default because of the things that you're going to learn. How much in terms of profitability, that's all determine on how much the person applies what they learn. You're all going to get this. You're all going to get different results because we're all going to be doing something different. You're not going to trust everything I say. You're going to second guess everything that I tell you should do. You're going to wait for confirmation. You're going to not do the trade. You're not going to put your stop where I said it should be. You're going to take profit before I say you should do it. So you're all going to have different results. So that, to answer your question, it's no way for me to give a fair, because we're all going to have outcomes that's completely different. Uh, there's a lot of eureka moments. I'm being asked if it was a gradual thing, and yes, it was a gradual. It was, in my opinion, it was way too long. I wish it would have been a lot sooner. I had to learn a lot of painful lessons, like we're learning today. Okay, now dollar's releasing. Dollar CAD still holding off. That's good, but I don't want to see dollar run too much. If it gets too far ahead, then it won't give us the New York setup I'd like to see for US CAD. I see US CAD up here about 10 o'clock in the morning, New York. Aussie dollar still looks nice. It's bucking the dollar strength. Oh, excuse me, guys. Yeah, it'll be interesting to see what happens if we hit this level here. We might be seeing dollar rally just enough to get the down to the cable. I'm sorry, rather, we might be seeing dollar rally just enough to drive the cable down into this level here and expand euro pound higher. There's nothing really in here that I could see either in regards to an order block. It's all really nicely traded, very efficiently traded. We have equal highs up here. Do we have enough momentum to get up to that level? I don't know. That's a little bit of a stretch. Let me see. What do you see there? Equal highs up here. Buy stops on euro pound. Euro dollar sideways. The reverse of euro pound buy stops in the form of cable sell stops. So is that what we're going to see a run on today? I don't know. Given what we're seeing here, it looks like it may happen, especially if we see dollar stay in its range and not see strong direction. The trade will pan out in euro pound using euro dollar sideways and letting cable drift lower. So, children, this is what I see going into New York, so I can go to bed and you guys can end this portion of the presentation. If we see dollar CAD hold on to its consolidation like here, that means we're probably going to see it trade up into 131.52, spiking to 131.55, and we'll see if we're going to have any legs above that. Euro dollar should stay sideways. Pound dollar will probably want to run these lows now. The reason why I like to say that is because we have euro pound with stops above the equal highs. No definitive bearish order block or void to fill in. It's been really consistently traded. The only reference point above us is the breaker here. It took the stops here. So if we get above 84.65, we're going to look for a run on liquidity above these two equal highs, and that would drive cable below these lows here. If we drop down to this level here and we get a buy, if it trades back up through, look for this order block to get recapitalized as a potential scenario for New York. Otherwise, if this level gets up to ghost, we're going to reach for these stops. And it still is low probability, so it's not a live trade invitation. Just use those levels to practice in. And I think that's about it. Aussie dollar. We've already outlined that earlier in the video, way earlier in the video. If we get above this high and we trade above it and come back down, doesn't have to happen today, probably won't happen today, in fact. This would be a bullish breaker. I'm sorry, no, I'm saying that wrong. We were saying that if we took out this low and then traded through it, then we would use it as a bullish breaker. If we trade through it now, it's a break in market structure, and then we have to come back and find a bullish order block after it takes out this low. So that's what we would be looking for. This could still roll through, and in that scenario may pan out. We didn't really break any significance on the downside here. Didn't even break the low. So they've kept those sell stops below the marketplace intact. So we might be just seeing a run up into 75.40 to 75.45. If it hits that and sells off, we'll run the stops on 74.90. That's that. All right. Well, hopefully you got something out of it. Main thing is understanding what we've been teaching the last week and a half is, and it goes along with the high probability video on the YouTube channel that's in the free members area still, uh, market symmetry. So if the market doesn't give you symmetry, then you're likely to sit in the mud and have conditions that are just not going to be favorable. And it makes it almost like a guessing game. And for those that have been with the mentorship, unlike the ones that just signed up, you don't have the benefit of having been a part of the live sessions last week where the market was in a very symmetrical condition, where it was very efficient for us to be able to call specific moves right to the point of entry and where they was going to go to right to the pip. Contrast that with now. Okay, if we would have started the mentorship with this environment, you probably would have been like, well, this doesn't feel good. I don't feel good. I don't think it's a good purchase. So now you have the other side of the spectrum, and we're going to have this back and forth over the next 12 months. Okay, so you got to learn that there's going to be conditions where it's going to be highly favorable for us to be active, and then there's going to be other times where it's still something to be watching, but it's not something to be taking a live trade in. And you'll be able to know what I mean when I say it's low probability. You know exactly what I mean. Don't take any trades. And when I say high probability, you do what you want to do with your own money, and I'll leave it at that. So I'm going to wish you a very good day, pleasant day. I'm going to get some sleep, hopefully. If I can get my wife to wake me up, because I probably won't wake up on an alarm clock on this one. If I can get her to wake me up around 7 o'clock, I'll touch base with you again to see where we are in regards to what we just said regarding all the pairs. So long session today. You get a 2-for-1 since I didn't get a chance to do anything with you yesterday. And going forward, again, our aim is really to be more concise about what we're looking for. But today's conditions, really good lesson, really good opportunity to teach in this environment, because if you learn how to trade or lack of taking trades in this environment, you'll save yourself a lot of aggravation. So with that, guys, I wish you good luck and good trading. Always stick around for those after the credits.